Hey everyone, welcome back, and thank you for tuning in to another portfolio review. I am recording this on Saturday, but you will see this posted on Monday, so some things could change. But I got paid this week, which means I put in some more money into the market, and we're getting there. Right now, I have 45. Well, personally, I've put in 45,000. Yeah, and some change, but it's kind of gone up and down and some volatility here and there. But we are getting close. If you watched, I think it may have been episode 2 or 3. I had like January 2020 goals or something like that. And my goal, I said, was to put $10,000 into the stock market, into my investment portfolios. And that's kind of what I've been working towards this year. And between M1 and Robinhood, I've put in $9,000. So I'm $1,000 away. And we'll kind of go through the history of what happened in the last week or so of what I've done and dividends and kind of talk about that some more. But back when I made that goal of having $10,000, I was only making like $1,000-ish a month at my job. And I was like, I'm not going to be able to live on this if I choose to move out and whatnot. Because last year I graduated from school, but again, being at my job that I was working at to get through college is not a job that I wanted to stay at, to kind of put it in a long about way. But eventually another job opportunity came along. I've basically doubled my income since then. And with the coronavirus coming around, well, I wasn't able to move out like I was planning on. So I've been able to at least invest a lot harder into the market. My tax refund was definitely bigger than I was expecting. I wasn't expecting to get a stimulus check at the beginning of the year. So a lot of these factors have really helped in expediting this stock portfolio, as well as paying down my loans, which we'll cover as well. I'm covering a lot of this stuff because I don't assume people to watch these videos from week to week, but those who do already kind of know this. So I'm $1,000 away from my goal, and I don't know what to do after that point. I will probably be maybe less aggressive, possibly. I don't know. It's so much fun investing in the stock market and seeing my dividend income grow that it's kind of addicting. It's a good addiction to have, I must say. And wow, I'm just really surprised like Zynga has grown as much as it has in like the last week, month, like 3 months when I got it. I mean, in the last year, it was like trading around like $5, and now it's just skyrocketed. So that's weird for a free stock that Robinhood gave me. But anyway, back to what I was talking about. It's just really addicting, and I've wanted to also pay down my debt, but we're working on both those things at the same time, so we'll kind of get to that as well. So let's take a look at the activity that I have been working with. So I put in $450 into Robinhood and into M1 Finance. So that's I got paid 3 times this month. So, you know, the first paycheck usually kind of pays for like my first part of like my monthly expenses, like my repeating, like, you know, like my food that I pay for and like certain bills that get paid or get charged on the beginning of the month. My second check kind of finishes up any of those, like my phone bill, any charges that haven't balanced yet, anything that I've purchased. So I generally am kind of even at the end of the month and invest what I can. But with this being an extra free check, I was able to really go hard and invest quite a bit. So it's somewhere up here. I don't know where it is. Okay, maybe it doesn't say it. So basically, like long term, is I couldn't find any stocks that I really wanted to balance out in a sense. So what I did is I added a new position. I added Jpmorgan and Chase. I bought 4 shares at 100 apiece for $413. So that was pretty much my whole shebang, like in one go. But you know what? I've been wanting to add Jpmorgan for a while, and I figured now's a good time as any. I think we can take a peek, possibly. Maybe I have to go back. All right, well, let's head back just so we can take a look at where their stock has been the last couple months and how they've been affected by the coronavirus drops and dips and everything. So they have gone down a little bit, so I could have got a better deal on them, but whatever. It's not a big deal to me. So if we look at the last month, they were down at like $84. About $79. So I could have definitely gotten a better deal if I invested in them early. But I just saw so many opportunities with Wells Fargo and Kraft and Coca-Cola and a lot of other companies that I've been averaging that Jpmorgan just didn't seem like that good of a steal of a deal. But they have been at $140 back in February, and if we look at the last 5 years, they're kind of sitting at where they were back in 2018 when they dipped. So there's definitely some growth potential, and their dividend was very appealing as well. And we'll kind of get to that once we get to the stock portfolio spreadsheet part. Oops, not documents. That won't help us any. So I added some positions of that. Really excited to add Chase Bank as investment because I have multiple Chase credit cards currently. That's the only thing I can really do. There's no Chase Bank around me. Oops, I didn't want to do that. We'll just refresh. But I really like what they do with the credit cards, and I think they're very aggressive, and they know what they're doing in the credit card world, and I plan on getting 2 more from them going forward. And as far as how you feel about credit cards, it really doesn't matter. Your opinion's not going to change what I do. I charge everything on my credit cards, pay it off full at the end of the month, earn the points, hurrah. And maybe some point in the future, I will screenshot like how much money I've earned from just using credit cards and paying them off in full. I think my Citi Double Cash, I've earned like $250. I've earned the sign-up bonuses on Marriott Bonvoy, Chase Sapphire Preferred, Chase Freedom Unlimited. So that's like $500 from the Chase Preferred. Plus, so I think I have like $800 there, and then $300 from the other two, and then the Marriott Bonvoy is like another like $400. So that's a lot of money that I could just cash out and invest, but we'll wait till that day. So there's a $450, like I said. And then I saw Marathon Oil as a good buy as well, kind of averaging down, and I'm pretty sure I've completely averaged that down. So simple, not a whole lot. The cash management system earned me 2 cents this month. Woot woot. So now I've earned a total of 3 cents. And then a last minute dividend income came a couple days, well, yesterday, but it kind of showed up a couple days ago. So another 78 cents from S&P 500. High dividend, low volatility. And then again, we have our June ones pending, and I'm really excited for that Wells Fargo one that's going to be coming in. That is going to be really nice. So yeah, not a whole lot to, just clicking all the wrong things. But yeah, you can see that so far Royal Caribbean has been my best investment so far. My equity in that is $210 when I've only invested like about $100. I guess this is cool to look at, and we also have it in the stock portfolio too. And so far my worst one's Wells Fargo, but I do see that coming up eventually, and that will balance itself out. But as it sits right now, like these, I've quote unquote like lost, money from like these 4 or 5 or whatever, but I've balanced it out. Like if we take a look, I'm only $90 down, but it's fluctuated quite a bit. And like all these greens have really balanced out the hardcore reds. Like Royal Caribbean has basically balanced out most of Wells Fargo. Kraft Heinz finishes up the rest, and yeah, there's just a couple that are a little volatile. But yeah, I mean, not a whole lot to talk about other than what I showed already. M1 Finance hasn't really changed much as well. If we look at the activity, again, you can see that I made the deposit. We bought some more buys. I guess we'll take a peek at what it did buy. Dominion Energy, some more iShares, Target. Yeah, I mean, just some great companies, good buys. Just continuing to average out. And then we got a dividend check this morning, technically, or maybe it was yesterday. I think it was yesterday because it says yesterday, from LTC Properties. So again, things are going along. In a couple days, we will get the report on how much we made from M1 Finance. So we can take a look at that. And you can see that this is also balanced out quite a bit as well. We've put in 45, and then 2606 was dividends roughly. So with that, we've reinvested that as well, and it's starting to grow, and that's kind of what we're seeing right here. It took a tank. I was kind of, again, as I've said before, I've been using the bucket to fill it in to stop the pain, I guess, of all the drops and take advantage, and now it's starting to go up. And things are starting to return to green, which is good. We still have real estate really taking the hit, and a lot of that is just due to, well, Simon Properties, new residential, but a lot of it's just with people not having the income that they have from their jobs. Normally they can't pay rent, and when they don't have rent, these companies run into problems. But I am sure with things starting to turn around, more so than the news is really wanting to reflect, things will turn around. I've been back at work for a couple weeks. Minnesota's opening up June. So next week on Monday, we're opening up. Other states are going to be opening up. I think bigger states like New York, California, Texas, Florida, bigger states that have been affected are looking at June 8th and kind of reevaluating from there. But this isn't the episode to kind of go over that more so. Maybe we can leave that for the next episode and kind of look at the numbers. But they're really starting to flatten out and drop quite a bit more than people are really wanting to admit. So you can see that my pie has kind of started to even out. We had for a while energy sector way above average, but we've kind of dropped it down a bit. But yeah, so that's been the activity. Some other dividends came in as well since the last time. Realty, Main Street, AbbVie, Royal Bank paid, Welltower. So yeah, you probably saw that when we were over here. I just didn't talk about it. But yeah, money's still rolling in, and that's really good for the growth here. So again, sliding back over to here, you can see that I added Jpmorgan, a little bit below the average, unfortunately, but I mean, it's still, at the end of the day, close to $400 in equity that at any point, if I need to liquidate it for some reason or another, like a emergency came up, that's $400. Like if we look at the statistic, I'm just going to pull it off the top of my head, but it's like a good portion of Americans couldn't deal with a $1,000 emergency or a $500 emergency. Like right here in these two companies, like I wouldn't want to sell them. I want to hold on to these as much as I can. But if I needed to, there's my $500 emergency solved. I don't look at this as like a savings account, but essentially that's what it is it's me putting money aside to generate income for me, to grow my income. But if something major happens, I have this money ready to go. I won't have it right away, but that's what credit cards are for, unfortunately, is to temporary pay for what needs to be done, and then by the time I get this money, that's when it'll show up on my statement to pay it off. So I mean, my system that I have working for me, I think works really well, and I'm very comfortable with it. So to each their own. So yeah, I did buy on a day where everything was up, which is kind of unfortunate because now there's some good companies that can average down a little bit more, but dollar cost averaging, that's what it's all about. You're going to buy high, you're going to buy low, but with this I can at least take a quick look and see, invest like the S&P 500 is down a little bit. I could buy 3-4 shares of this and drop it down a little bit more. It is what it is. I don't have the massive income to invest a lot of money, but I do think I'm investing a lot more than the average person, by far. I think this month alone I invested like $2,000, which is a lot for me. Where some people are like, oh, I can do that every week, $2,000, but I'm a fairly average investor, I'd say. And I mean, if we look back at Robinhood and we look back at the history of investing, if we just do transfers, if we go back to September, 100, I was very consistent. I was just dipping my toes into it. I was just trying to figure it out. And then once I saw some dividends coming in, and I was like, wow, this actually does work. 300. I was like willing to put this money in, 100, boom, 500, 300, 150. And this is when I really got comfortable with investing, like even more so than what you saw before. And this was around the same time that I got my new job. So now 400, 200, 200. 200 has been kind of the average, I'd say. 400, 300, 450. So big numbers. Like I'm, also the stimulus check and tax refund help. But my comfort level with investing grew. And I started putting more because I saw the potential of this. So, yeah. And then if we slide over to the dividends, you can see that we finished out May. We're not getting paid any more this month. We finished out at $7, which is about even with last month, which is really awesome. It makes sense because it seems like 1, 2, 3 big month, 1, 2, 3 big month, and you can start to see that it's starting to like keep growing, and you can see it from the chart as well. That more companies pay on March, June. I think it'll be September and December. So we'll probably see another big month in September, which is really exciting to see. And part of that is Wells Fargo, my company that I get a lot of money from, pays those quarters. So we'll see some good money. And you also saw that in October, November, and December was a big month. So we're starting to see the pattern grow itself right here. And yeah, like these two were very similar in price. These two are very similar in price, but this is where it's going to grow. So really exciting for me. I hope you guys watching this get excited from watching this as well. So we're sitting at currently earned projected $47, which you can see that's a huge jump from the last year and my first year. I also updated my projected dividends. Now that we're starting to get farther into 2020, the projections are going to be off more and more as we go. Part of it because the coronavirus has stopped a lot of companies from paying their dividends, and because I may buy more craft, but they already paid a little bit earlier in the year. But this will now kind of give me an idea of what I'm going to be making in yearly dividend income from my companies overall. So I may have to change this, but I just like keeping track of that piece as well. So if we look down at Jpmorgan, they pay $3.60 a year for one share. So by 4 shares, we're getting $14 from Chase. That is huge. That is like, as soon as I saw how much they pay a year, I'm like, yep, I'm buying as many shares as I can. Like, that is some good money. I mean, on the same note, if we compare like dollar to dollar, one share of Wells Fargo is about, it was at the time $50, so you were getting about $1. Now they're trading for roughly, we'll say $30. So share for share, we can get about $1.50 per year from Wells Fargo. So generally speaking, dollar for dollar, Jpmorgan is going to give me more dividend income. But because Wells Fargo has been so cheap by comparison for such a longer period of time, I've been able to dollar cost average and add a lot more to my portfolio, which is why they're paying me $50 a year overall, which $50 divided by 4 is like $10, which is kind of what we saw from the $9. So we're getting there, and it's awesome. So now we're sitting at $240. I also added more, where is it, MRO? Yeah, so that went up a little bit. Not the biggest, not the best, use of money, which I could have invested it into craft and got more income. But again, at any point, if I see that this goes up in value, or I mean this one, and it's worth selling to maybe trade it into craft, I mean, we'll talk about that as we get there. But I like diversifying my portfolio, and that's where I saw a good buy that day. So $240 now, over the next 40 years is going to give me an extra $9,000 in lifetime income, which, as it sits right now, is going to go back into my portfolio. Now, again, long-term thinking, like $9,000 like over 40 years isn't a whole lot, but I mean, if we look back at just like a few weeks ago, let's see if we can pull up another calculator here. I wish I had it tabbed up there. Calculator. There we are. I can pull up one really fast, but the second one isn't as good. 227 times 40. I've now added $600 in lifetime income. So, just for which is kind of funny, putting $450 in has added close to $600 in lifetime income, which not bad. I mean, it's not the worst way to spend $600. There's probably plenty of people that spend $600 on a phone and it doesn't do anything for them ever. All it does is cost them money. So that's the difference between an asset that generates you income and a liability that costs you money. And for a lot of people, a phone, as an example, is a liability. So again, I said in the last video, I'm going to start covering my M1 finance portfolio spreadsheet in every video because not everyone watches it. But on the next video, we will get May's numbers and we'll get this updated. And that is always my favorite part of probably anything, is just watching this chart change, because it was developed, again, by the Joseph Carlson Show for his use. He allowed other people to use it because a lot of people are using M1 Finance and the numbers still work. So it has all these different doodads and functions, and it's a lot of fun. As of right now, we're sitting $1,300 over where we were last month. $1,300 over last month. That's mind-blowing. So I'm really excited to see what our income will be. And I'm sure we're probably going to start seeing the trend where it's like low, low, high, low, low, high. But yeah, it's really excited. We'll talk about that next video. But you can see, like, this is supposed to be my average income, and for the last 3 months, we've been over the average income. Not by a whole lot on these two, but I mean, hey, higher than average is higher than average. We were down in January, but January is a low month of paying, so that makes sense. And December, we were also above average as well. And if we take a look at this is just kind of another chart viewing that we are going the right direction. Up, 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 down a little bit, but up, up, down a little bit. But again, we're still trending. And again, if we take a peek back at this chart, again, like, we've kind of figured it out. March, June, September, and December are the big months that pay out. So that's going to happen. But as long as we're going up each time, each quarter to quarter, we're going up, that's all that matters to me. And that's what's going on right now. Average yearly income also tracks that. So right now, as of last month, our average income is $60 a year. We'll see if that changes. It's supposed to predict that next month it will go up to $66, assuming our percent change is the same. But I don't think it is, because we've been able to invest a lot more this month. And again, our portfolio value, it's tracking that piece as well for us in this beautiful shade of green. You can see when everything was dipping down, I was adding in to even it out. And then now that things have kind of stabilized a little bit more, we can see that jump up. Really fun chart to look over. A lot of fun. If you want to create your own, if you're using M1 Finance, check out the Joseph Carlson Show. He has a spreadsheet for everyone to use. Last sheet that we'll cover is my net worth tracker. I said that I'm going to update these three values in the last video. I'm just going to leave it as is, and I'll talk about that as we work left to right. So my loans got paid down a little bit more yesterday, which is awesome. Really excited to see. We're just about below $10,000, which will be a big milestone. Just a few short months ago, we were sitting at $15,000. We've paid down $5,000, and just from a couple months before that, we paid down $2,000. So in the time that it took us to pay down $2,000, we paid down $5,000. So that is awesome. Just being very conscious of your money and what you're doing. For a lot of people, it creates stress. It makes them feel like scared and have anxiety, but because I'm so focused and I have everything laid out, it makes me feel confident for the future that I am not going to fall into the same patterns that previous generations and other people fall into, of buying so much stuff on credit and going into debt and living above my means. I want to live below my means, so then I can it's like what Dave Ramsey says, like, do what no one else does to live like no one else does. Live below your means, buy your assets, have your assets generate money, and just keep snowballing that. So yeah, I'm really excited. I can't wait till this is paid off. It's going to be such a great feeling. And as I've said before, I will be selling my one vehicle, my Mustang, to hopefully pay off my car loan, will be the goal. And also to have my watch loan paid off. And when we check over the other tab, I can show you how much a month I am throwing away into these liabilities that just upsets me. But as I showed in the previous slide, $450 added $600 in yearly income in 1 month. So we'll try to do that same logic on the next slide and see how much my liabilities could have generated me month over month, and then we'll times that by 12, and that's, yeah, okay. We'll get to that in the next slide because that is actually kind of a fun math problem. I love math. Sorry. So anyway, we'll just leave these the same. Roughly, my Mustang is worth about $8,000. Roughly, my Fiesta is around $9,500. Probably a little bit less. Again, as I drive it, it lowers. It's not a very valuable vehicle overall. It is what it is. I own myself a luxury timepiece. I bought it as my graduation present from school. I graduated debt-free from school, so I thought it was a good idea to go in debt to something else. But I love my watch. Worn it every day. Not going to sell it. Its value is roughly that. Probably going to dip down a little bit in the coming years, but moving forward, probably in 10 years, it could be worth up to $15,000, I'd predict. So that's what we're looking at. And as you can see, my portfolio, beautiful, beautiful. My goal is almost there, and we're not even halfway through the year. That's awesome to be at the goal that you're wanting to be in December, already in nearly at the end of May, almost into June. So that's awesome. You can see that my retirement account has been stagnant, starting to go up a little bit. That's because I left one job where I was contributing to my retirement account, moved to a new job, not eligible yet. So that's that. And you can see that my savings is stagnant around $1,000. I have my $1,000 emergency fund, so I can use that first. I have a little bit more in it because of how I do my finances. I get paid in my checking, move it to my savings, move it into these. And then from there, the savings pays off these because I always have $1,000 in my savings. So I make sure every month I transfer enough for my loans. I transfer enough for my car insurance for when that comes around. I'm ready to go with that. And I put a little extra into savings. I don't need to put any more extra into savings, but more money's better. I can't complain that, I have an extra 100. I now have an extra 200, and next month I'll have an extra 300. Why not? Why not prepare myself for anything that could come down the pipeline? Dave Ramsey says, why not put that extra towards a liability? Hey, I'm not disagreeing. Personal finance is personal. That's what I'm doing. And again, checking is very stagnant. Last month, it just happened that I got paid towards the end of the week, I'm sure. If we take a look back at April, yeah, boom. End of April, that's where I was sitting at. I got paid that day. Nothing balanced out yet. That's why we were sitting where we were. So normally I try to keep it this low because my money needs to work for me. I put it into investments to work for me. So that's just my logic there. And my asset total, beautiful. I can't wait till the assets stop taking it down a notch. But boom, we passed $25,000 in current net worth. That is so exciting. That's a huge milestone. No one else cares but me, but that's fine. And as we can see, it's been growing. As I became more focused, you can see that it really started to shoot off. This is before I was really focused on it. And then this is just kind of the month. And I always want to see it above that line. And in previous videos, we talked about what exactly happened here. So if you ever want to check out and wonder why I was negative, well, I talked about it in previous videos. So, and then this is my debt snowball tracker. I wish I could remember the person that had this chart set up, but I loved it. I thought that was so organized. He had his debt and his wife's debt all on one page. Well, you know me, I only have 2 debts in my life, which is very unfortunate, but hey, you work from it and you keep moving forward. So what I've got going on is I've got my 2 loans. I just, went top to bottom on first ones and last ones. I have the amount, what they started at, how much I've paid off so far, which is a formula, what the interest is at, what my monthly payment is, and what my minimum payment. You can see what I am supposed to pay minimum. I pay a little bit more just to pay it off a little sooner. save myself in interest, keep track of my monthly total, and then this numbers are just quick glancing what I've paid off, what I started at, what I'm at right now, which I have not updated actually because it's a little bit different, but same concept applies. So $330 is what I pay every month to assets that do not generate me any money. $330. That could go, a long ways in helping me pay for rent and food and everything else when I do move out on my own. Or if we take the same logic, let's see if I can do something and make the calculator unpin from start. It's not pin to start menu. There we are. Perfect. So in the last example, 450 divided by 600. I don't know if that's right. 600 by 450. I don't think that's right either. I'm just trying to think of like what percentage to go up. So we'll just say for fun that the $330 will generate me $400 a year, or $400 over the course of my lifetime. So $330 or $400 a year, or $400 over the course of my life times 12. Yeah, so I'm trying to think if that's right though. Basically what I'm trying to figure out is if I, instead of putting money into this, I put them into investments, what that investment each month would generate me over the course of my life times 12 months, maybe times 40 years, I think. So 400 times 12, because that's a year, and then times 40 years. So that's $192,000. That's probably about right, honestly. So if I, instead of having these liabilities that are costing me $11,000, like nearly $17,000 just to own these items, if I instead invested that into income generating assets, my opportunity cost is $192,000 over the course of my working adult life until I retire at 65, I think is how my math is working, because I'm 25, 40 years, 65. I know this is a bit of a long video. If you've stayed this long, that's awesome. Thank you. But take a look at your liabilities. Take a look at your loans, your credit card bills, anything, and just roughmate it. Let's say even if like it didn't generate me more income, like say I bought like growth stocks or something, times 12 times 40, it's still $150,000 of opportunity cost being wasted. That's pretty intense. And if you're an even younger person, if you're sitting at like 18 years old, that's like 45 years instead. So 330 times 12 times 45, that's 175,000. And on top of that, you've got growth from the stock market and dividends and a whole lot more numbers that grow it even faster, compound interest. But that's what I'm seeing right now. That's what I've learned to see, is like the opportunity that I am wasting away by having these liabilities that take away from my income. And maybe someday I can, develop I have a budget spreadsheet, but I don't want to show you mine necessarily, but do like a mock-up one of like, if you make $2,000 a month, having $300 take away from that, that's huge. So maybe someday I'll do that. Not today. I have like hiccups now from talking and whatnot, but I want to thank you guys for stopping by. I always appreciate you watching these videos, and I hope someday someone will comment on this video saying, your videos have inspired me to invest. What you said really resonated with me, and that's my whole goal with these. I'm not a financial advisor. I'm just some dude that got an elementary education degree that works at a jewelry store right now that is really into personal finance. That's all I am. You can take what I say to heart. You can take it with a grain of salt. You can take it however you want. But at the end of the day, if I inspire one person to do what I'm doing, that's a success to me. But again, I want to thank you guys. If you made it this far, that's awesome. That's a lot to sit through of me. But again, I appreciate it. So I can't wait to see you guys on the next video. I post other videos too if you want to check those out as well. I do gaming as well just for fun in between, because that's another hobby that I enjoy doing. But that's all for me today, guys. Take care, have a good day, and stay healthy, stay safe.